Welcome to speedearning.in. How to decide the target in online trading. Today we are going to discuss about this. Target cannot be fixed. Actually, it depends on the market conditions. But there are some general rules. So what is the first rule? The first rule is SL to profit ratio should be 1:2 or 1:3. Means your stop loss should be less and your target should be more than 2 or 3 times. Otherwise, you cannot save the margin for which you are trading. It will generate your income. It will give you the proper reward so that you can continue the trading. And it doesn't mean that you should have the big targets. Actually, we mean you should have small stop loss. Say, if we are having 30 paisa stop loss in Zinc Mini or Lead Mini, then target will be 1 point or 1 rupee. So, keep the stop loss as small as possible. For that, you will have to follow the time discipline. At particular time, a very small stop loss can work. So you can see all those details in some other videos. Now, second thing is target should be small in first half of any time frame. Suppose time frame may be daily, it may be monthly, it may be yearly, but in first half the target should be small, and in second half it may be higher, it may be more. So in stock market, before 1:30 p.m., before opening of the European market, the profit will be 1 to 2%, and from 1:30 to 3:30 the profit may be 3 to 5%, because after European market opening and after the total trend setting, there may be a clear move in any direction. So you can have a sudden movement that can give you 3 to 5% margin. In case of MCX, till 6 p.m. that is the first half. After 6:30 or 7 p.m. it is second half. So before 6 p.m. when global market didn't open, there may be a very little movement. So you can book profit over there, suppose 0.3% to 0.78%. 0.3% means in silver it is 100 points, or maybe maximum 250-300 points. But after 6:30 when global market opened, you can expect 1 to 2% movement, when 300-400 points to 800-900 points in silver. In case of crude, it may be 10-15 points in the morning. In evening it may be 25-30 or maybe 50 points sometime. So in second half you may expect a big target. SL and target should be calculated as per your capacity. Then you should calculate this technically. First, as per your capacity. So suppose crude is running 6,000 and stop loss should be below 5960, but you can't afford 40 point stop loss or 4,000 rupees risk. Then what should you do? What could you do? You can buy it on the first dip, a little dip, 5995. SL will be 5990, 5 point SL. This SL hit, then you are buying it again at 5980. The SL will be 5975. And if you get the chance finally, you will buy it 5965 and 5960 will be the stop loss. So you put the total 15 point in risk, and there are 70-80% chances that you are getting back minimum 15 to 30 points in return. So that is the right method. Now targets, it was the stop loss. Now what should we do about targets? Big targets are hit in 10 minutes and small targets are hit in 10 minutes. Means you just don't assume that for big targets you need to remain in a position for 3 to 4 hours. Actually, market behaves in cycles. So if there is some reason, if there is movement expected, so the 900 point in silver may come in just 10 minutes, and if there is no big reason, if there is no trigger, it will give 150 points. So you just go to the market, make a position with a calculated stop loss and try to get the cost back plus margin, whatever is there, whatever market is ready to give you. Don't demand anything. You should be ready to get whatever the market is ready to provide. We don't have any target because we didn't got any loan to run this business. We are out of all the liabilities. So protect your energy and capital till the right chance. And I told you already, in case of trading, out of 100 days, 70 days are range bound, those are bore, those are dull, and only 20 to 30% days are right chances. So you will be ready for those chances. So suppose you may enter in gold with 30 point SL at 630, and if there is some right move, it may give you 200 points in just 5 to 10 minutes. If day is not good, with 30 point SL you are getting 60-70 points hardly, and you will have to exit with 50 point profit only when it is not going ahead and coming down. So with 50 point you will have to exit. Okay, and book once. Suppose if there are profits, book once, and then what will you do? Keep a stop loss buying above the high. Above the high you are putting the stop loss buying again. But suppose if it is going further without reversal, then your buying will activate again and you will get the profit again. And if it is coming down, if there is some reversal, so we are going to buy it in dips in next time slot. So we are always having the ways, we are always having the methods to take the safe profits, but you should have the habit. And before taking the big losses, we don't ready to learn the right habits. Now in long term, if someone is selling a share, suppose Eicher Motor, that was priced 530 rupees and now it is running 10,000 rupees. So if someone is holding and he booked some profit at 3,000 level, then 7,000 and is still holding at 10,000. So we can't believe it. It is just amazing. So it seems just impossible to a normal trader because he feels a big temptation to book the profit even in 10% increase. Suppose he bought it 500 rupees and from 530, 550, 570 he feels the strong temptation. Should I book the profit? And suppose it came from 570 to 550 one day and then it is going back again at 575. No one is able to stop you from selling. So some fellows sell the full quantity. If they are having 100 shares and they have sold the 100 shares, then we are not having the chances for future. But don't worry, if it is happening, it is obvious. because in that phase it happens to all the traders. In that case we have the answer with the duration. Suppose if someone is deciding that I am going to hold this stock for 6 months or say 2 years, then after 6 months you will watch that iShare was bought at 530, 600, whatever the price was, and now it is running 3500. So that is the out of danger, out of fear range. Now we can hold it till 10,000. There is no problem, because we are worried with our buying price only. And if it is very far above the buying price, then the fear is gone away. So then price goes beyond the range of fear. Say 530 rupees stock crossed 3500, then we can hold it till 10,000 rupees price, and you don't need any rocket science to book such a profit. You need just a plan, a patient plan, but not very patient, because you are having already more patience than required, because you are paying to an insurance policy for 25 years and getting only 3 or 4 times back. So you are having more than necessary patience already. I would advise you to cut down the patience by 1/4. Just wait for 3 years or 4 years, you will get the definite profit. Now do not stick to target. Do not stick. Means put the big target in order, but exit early if technical changes. Suppose technicals change or time slot change, you just exit early. Suppose you bought lead many at 142 and just put this target of 144, because many times it suddenly goes up and touches a big target and then suddenly comes down back. So if you are having a order placed there, you will book the maximum profit possible. But till 6 PM I see that there was no big move, and I bought it 142 and it is running still 142.7. So just book it once and we shall re-enter after 7 PM. So these are some general rules what we discussed about target. These are guidelines. I suggest you to experiment and think ahead of this, so that you can come up with something new, very new, which will be useful to so many other traders. Thank you very much. Keep the confidence and enjoy the trading. Bye.